Hey everyone! Welcome back to the channel, where we bring you real-time Forex insights and trading strategies that keep you ahead of the curve. Today's video dives into the key moves we saw in the Forex market on November 8, 2024, along with what we can expect for tomorrow. I'll cover the top currency pairs, the factors driving the market today, and a few trade setups that might be worth watching. Let's jump right in. Today, the US labor report for October dropped, and it sent waves across the markets. We saw better-than-expected job creation, but wages slowed a bit, which made things a little mixed. On one hand, strong job numbers can drive the dollar up. On the other, slower wage growth could make the Fed think twice about tightening policy aggressively. For USD pairs, this mix made for an interesting day. While the dollar saw an initial spike, we noticed some pullback as the session continued. Tomorrow, traders will likely focus on how the US dollar positions itself, especially in the context of what this data means for Federal Reserve decisions. In Europe, sentiment data showed a slight decline, hinting at some uncertainty in the eurozone. The euro was under pressure throughout today, and if economic sentiment continues to drop, it could keep the euro to US dollar under downward pressure. Tomorrow, watch out for any statements from the European Central Bank. Any dovish signals could send euro to US dollar further down. Over in Asia, we saw a lot of attention on the Chinese yuan and Australian dollar. With China's latest stimulus measures aimed at reviving growth, the markets are waiting to see how effective these measures will be. This impact is directly reflected in pairs like Australian dollar to US dollar and USD/CNH, as Australia's economy is closely tied to Chinese demand. If you're trading these pairs tomorrow, keep a close eye on overnight news from China, as any surprises could shake things up. With the euro struggling today due to weak sentiment data, the euro to US dollar pair closed lower. Looking at tomorrow's forecast, if bearish momentum continues, we could see euro to US dollar testing support around the 1.0600 level. A break below this could open doors to 1.0550. On the other hand, if there's some positive ECB news, we might see it bounce back toward 1.0650. For traders, this is one to watch carefully. This pair saw some action with the US jobs data. The yen weakened slightly due to dollar strength, but with Japan's central bank taking a dovish stance, US dollar to Japanese yen could keep pushing up. Key levels to watch are 150.50 for support and around 151.20 for resistance. If the dollar maintains strength, we could see US dollar to Japanese yen heading towards 151.50 by tomorrow. Conservative traders might look for a dip to 150.50 before going long, while more aggressive traders may see any retracement as a buying opportunity. The British pound's been volatile lately due to uncertainty around the Bank of England's next steps. Today, pound sterling to US dollar traded lower, and if we don't get any positive news out of the UK overnight, this could continue. Tomorrow, look for support around 1.2050, while resistance sits near 1.2150. If you're eyeing the pound, keep an ear out for news on UK inflation, as that could sway the pair. With the Australian dollar heavily influenced by news from China, Australian dollar to US dollar is another interesting one. As we mentioned, China's efforts to revive its economy could impact the AUD. Today, it saw slight upward movement, but tomorrow's open may bring some volatility. Key levels include 0.6300 as resistance and 0.6225 as support. Swing traders may find some range trading opportunities between these levels. Now, let's get technical and look at some chart setups for these pairs. On the daily chart, euro to US dollar is still in a downtrend. If you're thinking about going short, waiting for a pullback to 1.0650 could give a better entry. If it breaks below 1.0600, we could see a continuation down to 1.0550. For those who prefer to go long, a daily close above 1.0650 would be an ideal signal. US dollar to Japanese yen, the pair is showing a strong uptrend, with a series of higher highs and higher lows. For traders looking to ride this trend, an entry around 150.50 with a stop below 150.00 could work. A breakout above 151.20 would signal further upside. With pound sterling to US dollar, the short-term bias is bearish. If it bounces back to 1.2150, that could be a good spot to enter a short position with a target down to 1.2050. Conversely, if it breaks above 1.2150, we might see a move toward 1.2200. For Australian dollar to US dollar, a bounce from the 0.6225 support level could make for a decent long entry, targeting the 0.6300 resistance. However, if it breaks below 0.6225, it may head lower to test 0.6200. Segment 4, Market Sentiment and Potential Risks. Today's sentiment showed a mix of caution and optimism. Traders are optimistic about the US economy, given the solid jobs report. However, the mixed wage growth data has left some uncertainty in the air. This has traders on edge about the Fed's next moves, which could keep the USD volatile tomorrow. If you're holding dollar pairs, keep this in mind. One big risk to keep in mind tomorrow is unexpected headlines, particularly out of Europe or China. If we get any surprise announcements from the ECB, it could cause quick movements, especially in pairs like euro to US dollar. Another thing to watch is any unplanned updates from the Federal. As always, stay updated on the latest news and be ready to adjust your trades accordingly. Alright, that's a wrap for today's Forex market update and forecast for November 9, 2024. It's been an interesting day with a lot of factors at play, and tomorrow's looking just as dynamic. Remember, trading Forex isn't just about predicting the future, it's about staying prepared, managing risk, and knowing when to act. Thanks for tuning in. If you found this video helpful, please hit that like button, subscribe, and let me know in the comments which currency pairs you're trading tomorrow. I'll be back with more updates to keep you informed and ready for the markets. Catch you in the next one.